In this Smart Money Atlas session, we are going to talk about what are support and resistance levels and what they do. One of the most important topics in trading is determining these levels, and it is impossible that someone without knowing these levels achieve being a successful trader. In general, support and resistance levels are the zones that market decides to take its course. If we manage to determine these levels, we could anticipate market key levels and become a successful trader. Let's cut to the point. It is better to start with an example. Assume there is an upward trend and the price in market is rising. Later we observe a turning point in the trend and a reversal in market cycle, and the price starts to decrease. This means at this point in market buyers are exiting the market and bullish trend is ending. Therefore, this point gains importance, and we could count this level as point that market reacts to it. It is obvious that as price decreases more than usual, buyers start to open long positions and market initiates a bullish trend, and there is high expectancy and probability that price will rise and will reach new higher high than expected. At this point early bulls will close their positions, therefore market will face a decrease again, will return to a supporting zone, and will have pullback to a certain point. These levels is called support or resistance levels, and the reason behind these names is that when market reaches these zones will react to them. Channel trend lines known as dynamic support or resistance levels are the first price action zones here is explained. For this purpose, after getting first valid reversal, we look for a second leg pullback. Then, by connecting and continuing this potentially dynamic trend line, we expect price reaction to it. As it is shown in the chart, we see couple of reactions to this channel trend line. Next support or resistance level that we are going to talk about is horizontal line or static level. Determining static level is very much similar to channel trend line. As explained before, after getting a potential reversal signal we draw horizontal line to next pull back, and by continuing this line we expect reactions this zone. The main difference between dynamic and static zone is that the horizontal line is used more commonly among traders, therefore computers and algorithms reacts more. As shown, we can get more reaction expectation from static levels. Round numbers are our third support or resistance levels. It is more than obvious that in every charts have their own round numbers and can be determined manually or automatically. In each market there are some other numbers that market reacts to them as well, and these numbers have a special value among traders and could only be determined by looking to the market's history and back testing. In this example you can see in the chart that the numbers of reactions to these round numbers are significant. These round numbers act as support or resistance levels. By measuring price movement leg power we can anticipate how the price will react to these levels. Next important level is last day's high and low. Before starting a trading day, it is better to draw these lines by looking last day's high and low. This particular support and resistance level work especially in fast scalping and more shorter time frame like 5-minute or even 1-minute time frame. As you can see, there are numbers of precise reaction to these zones. A successful trader will optimize and increase his outcome by utilizing these critical points together. Remember, learning is a portion of trading, and for being a successful trader with constant income one must gain experience in real market. Therefore, do not rush and learn thoroughly, and watch our other training sessions carefully so do not miss a point. Probably the most important indicator that acts as a support or resistance level is exponential moving average. You can modify this indicator to your own strategy, but EMA 20 and EMA 100 are the ones that works best in my backtests. Price mostly reacts by reaching to EMA, and EMA shows great importance. The last important support or resistance level is obtained with last week's high and low. After marking last week's high and low, we divide chart by 2. Then we divide these two areas again by 2. These resulted 5 horizontal lines are our weekly map to current week's market. These 5 lines usually are potentially market's key levels and expected to have price reactions to them. As it is shown in this example, there are several reactions to these zones drawn by these lines. Remember, each one of these 6 support and resistance levels taught here is potentially a perfect entry setup, and by mastering only one of them you can gain constant profit from market and you won't need to learn so many technical strategies. As explained earlier, there is not a shortcut to make profit from market, and the key is constant backtesting from your strategy and optimizing and modifying it your own mindset. I hope you enjoyed this Smart Money Atlas session, and if you did, please subscribe and like. Appreciate your support.